Good afternoon, everyone. I, Ankit, on behalf of NEN and Vadvani Foundation, would like to invite you all for this webinar and also introduce our expert, Mr. Ajeet Khurana, educationist, angel investor, mentor, digital marketer. Ajeet is a member of the board of directors of Carvanished Technologies, a technology-enabled K10 content provider. He is also spearheading e-commerce education on about.com, part of the New York Times company. He is an active member of Mumbai Angels, deal champion, screening committee member, investor, and also a lecturer at the University of Texas at Austin. Ajeet has 2 decades of experience in the education space with many firsts to his credit. He has led teams across functional areas to get businesses and projects off the ground, designed teacher training that elevates quality without diluting individual teaching style. Ajeet has also harnessed technology for multi-locational education without undermining the role of the teacher. Ajeet is known for overcoming financial and operational challenges of running education business networks, designing curriculum, generating and acquiring content, striking the crucial balance between educational objectives and business objectives. He can wear the investor's shoes as well as the entrepreneur's hat. Before I hand over the floor to Mr. Ajeet, a quick note to all our attendees. You will all be on mute. You may ask questions by typing in the panel provided. Our expert will answer the questions after his presentation in the order they are asked. Over to you, Mr. Ajeet.
Thank you. This is Ajeet Khurana. Hi, good afternoon, everybody. Welcome to this session titled Getting into the Mind of the Indian Angel Investor. Now, on the one hand, this topic seems pretty obvious to understand, not necessarily the contents of today's session, but the topic that there is this thing called the angel investor. There probably is this thing called the Indian angel investor who might have some specific characteristics different from the US or global angel investor. And we are going to try to figure out this person. Naturally, since you're talking of an individual investor as opposed to an institutional investor, there will be so many variations from person to person that it would be a little silly to try to broad brush it to the point that we say they're all the same. But here is what I intend to cover in today's talk. So let me just first run through my slide deck, because my method tends to be, I like people to know what is going ahead and what we're going to do ahead. So we will first talk about, what really is an angel investor. I'll come to this slide in a moment. I assume everyone can see it. Firstly, we will focus specifically on the motivations of an angel investor. We focus on what this angel investor really wants. After that, we will refine it to brass tacks and say, okay, now that we know what the person wants, how does this angel investor evaluate what the angel wants and what do they specifically look for? Then, because I'm an angel investor, I have made 8 angel investments in the last 8 months, which by angel investing standards, I hope you know is a pretty high rate. I will tell you the rules that I follow and some of the rules that some of the other angel investors that I work with follow. Having done that, it will start becoming obvious that when you are talking of rules, there are going to be different kinds of angel investors. And what are these different kinds? We of course have to then, differentiate between an angel working all by themselves versus, something like a Mumbai Angels or an Indian Angel Network or any of these groups of angel investors acting together. And then I think the entire objective of this talk is not just to raise money from angels, but to also know whether it's a good idea and what to expect. So we will talk about what to expect from an angel investor, and then that will be the end of the talk. Okay, so I'm just rushing back to my previous slides. Here we are. Let's first try to come up with some sort of understanding of what an angel investor is. So is an angel investor a friend? Is an angel investor a philosopher, a guide? Is an angel investor Mr. Moneybags, who's the one who's going to bring you all this money? Is an angel investor a smarty pants who believes that just because I have made certain investments and maybe some of them worked out well, I know absolutely everything there is to know in the known universe, or for that matter the unknown universe, and I can advise every entrepreneur? Is the angel investor a pain, somebody who just doesn't get what you want to say, who cannot figure out the business but does not let that stop stop himself or herself from making decisions? Is the angel investor a bundle of contradictions? Is the angel investor saying one thing but quite obviously doing the opposite? Or is the angel investor an angel? Well, my answer, and by the way, I made these 8 odd points. I could have made far more points than just these 8. My answer would still be yes, the angel investor is all of these. And if instead of 8, I had 8 of these points, the answer would continue to be that yes, an angel investor is indeed all of these. I'm not going to go through every one of these points. Let me begin with the last point for a moment. I will cover most of these points in the subsequent slides. Why is an angel investor called an angel investor? Because the angel investor is an angel. That's a lot of angels to use in two sentences, but the fact is that the reason an angel investor is so called is because this person is willing to invest into your company when nobody else is. So to that extent, it becomes your angel of life, your guardian angel, somebody who participates, has some belief in you, at where you have demonstrated very, very little beyond your initial idea as well as maybe some amount of traction, right? Depending on whether some of you have interacted with angels, some of you might have actually raised money from angels, some of you might have vowed that you will never raise money from angels. Depending on what the truth of that is, you may have a different perspective of whether the angel is a philosopher or a friend or a guide, money bag, smarty pants, pain, or a bundle of contradictions. I do admit that all of us angels do have some amount of traits of all of these. Let's move to something more specific. What does an angel investor really want? Now, this picture that you're seeing on the screen is actually you. You, the entrepreneur, is trying to meditate and psychically figure out what is it that this strange creature wants. On the one hand, the obvious answer to what an angel investor wants would be the angel investor is an investor, so the angel investor wants return on their investment. That almost sounds like the most obvious thing to say, and you are right. That is absolutely the truth. The angel investor does want a return. Does the angel investor want anything else? Well, depending on the angel, they could want to participate in a business that excites them. Depending on the angel, they might want to get a board seat on your board to tell everybody that, hey, listen, I'm so cool, I'm a board member in 5 companies. Depending on the motivations, some angel investors would participate in businesses that, other than generating profit, also make the world a little better place. Some angel investors might have returns in mind, but not necessarily financial returns as calculated purely from the investment return, as in buy shares for 10 and sell shares for 100. But it might be that they probably have relationships with some other organizations, such as companies that they have founded, other angel investments that they have made, where they see some kind of a synergy between what you do and what some of those other businesses do. And as a consequence, there might be some reward or return that they are seeking in that relationship. So, long story short, what do angel investors want? They want their investment objective to be met. One of the investment objective for a financial angel investor as opposed to a social angel investor is that they want return on investment. How much return on investment do they want? Well, go and ask them. But my feeling is that if you were to convert it to an annualized figure, the number would probably be in the vicinity of 100%. Would 20% be adequate? I doubt it. Would 45% be adequate? Probably. 65? Yeah, we're getting there. 100%? Yeah, that should turn out to be adequate. Is that realistic? The answer is, if you look at the entire portfolio of companies that angel investors have invested in, then the answer is absolutely not. However, if we look at many of the good cases, I'm not referring only to the best cases which may have 100x or 1000x returns, but if you look at many, several of the good investments in terms of how they eventually turned out to be, yes, there are several angel deals that have happened in India which have given a 100% return, which means something like 4 times in 2 years, which annualized would become 100%, right? Or 8 times in 3 years kind of return. These are very much possible. Several of these have happened. They are not common, but that is the kind of return that the angel investors seek. So, if that is the motivation of the angel investor, what does the angel investor look for in my business? Now, this is where we start getting into a little bit of a controversial area. Because if I and 5 of my angel investor friends were to sit in a group discussion like setting and somebody asked all of us this question and said, list your top 3 points. Words such as team, that means the founding team, the team of entrepreneur, etc. I think would figure in top 3 points of absolutely every angel investor. But other than that one point, I'm not absolutely sure about what other points would seem like an absolute must-have in terms of the top 3. In that sense, our restriction is not so much to the top 3. Actually, all the factors that an angel investor or any investor could look at in an enterprise such as yours could be divided into internal and external. Internal would be things like who is the founding team, what sort of money they put in, what is the stage they have reached at, what are the strengths they bring to the table, how amenable are they to getting external influence, would they listen to my suggestions, are they open to participation, which is the internal. The external will begin from the sector that you have chosen to be part of, the market that you are a participant in. Those would be things like the external. So for example, are you a IT company, are you a clean tech company, power generation by solar cells? Those would be the external factors. I find that these two sorts of factors, the market opportunity or the external factors, economic factors, and the internal factors such as the team, the founding team, the age of the company, the skill set, etc., present the two approaches that angel investors take. For instance, if you ask me, here is what I do, external factors first. The reason is that in 90% of the cases, I actually reject a business plan because I feel that, somebody who has chosen to participate in this sort of sector clearly has a very different mindset or perspective or what is seeking life than mine is, so there will be a problem with our chemistry. I could very well be wrong, but this is how I go about it. Having then narrowed down based on some of the characteristics such as the industry they have chosen to play in, not the product that they are making, because that changes. But having decided the specific industry that they are going to play in, etc., I shortlist it and then I actually overlook all the external factors. That means I do not use the external factors as a method of selection, or rather I use it as a method of rejection. So, having rejected those where the external factors, market conditions, industry that they chose, the current state of economy that they are being affected by, the regulatory setup, the policies of the government in place as far as the business sector is concerned, having narrowed down, I now ignore it, and on the smaller set, the selected set of companies, I only focus on issues such as what is the team like, what is the management structure like, what is the maturity of the management like, how much is their skin in the game. For instance, I personally do not even consider investing in a company where the founders are doing anything else other than being full-time employed into making this company successful. As an angel investor, I told you that the kind of returns we seek are extremely high, but you have to see it in light of the fact that the overall returns on our portfolio are nowhere close to 100%. We are talking of 100% and or even more kind of returns for the companies that succeed. But then there are those which don't succeed. Average tends to come down, right? So if I am taking such an exceedingly high risk where I could invest in 10 companies and lose all my money in all 10 companies, that possibility certainly exists, not just at the angel investing level, even in later stages like at the venture capital level, etc. If I am taking that bigger risk and you, the entrepreneur, are not taking the risk of committing yourself full time to this, then clearly we have a problem, a conflict of interest. At the very least, I want you to fully be committed to your own business. It's like me being a teacher of your child, and I find that you as the parent are not committed to your child. I mean, that is just so absurd that I would not stand for it. I like to have companies which have far more than just a plan. I like to see a very high degree of chemistry between the founders. I like to see more than one founder. Two would do. More than that, I actually go with more the merrier, except for the fact that they are not going to be able to work with each other. Why I say more the merrier nonetheless is because I prefer the co-founder team bringing in all the core skills, and core skills are at least three, right? There is money, which we could call finance, there is marketing, sales, and then the third one is the technology or the product area. At the very least, there are these three areas. So I like the founding team to bring in all of those. Having said that, I also understand that the potential co-founder conflicts increase exponentially as the number of co-founders increase. With that in mind, I do rationalize my desire. So I'm not looking for a company that has 20 co-founders or even 5 co-founders, but these are some of the factors that angel investors look for. We are not going to be in a position where we come up with an exhaustive list, and different angel investors could have different points of view. So let's move ahead. Let's talk of rules that an angel investor follows. I'm going to tell you some of my rules, and as soon as I do, you will realize why on this screen the word rules is actually written in quotation marks, because frankly, there aren't any. Like for instance, if you were to ask me that, hey, what rules do you follow? I will, for instance, say, I prefer to invest in companies which are based in the city that I am based in. So I am based in Mumbai. So I would like to be invested in Mumbai-based companies so that I can have physical proximity to them, visit them, meet up with them, etc. And I have had this rule from day one. But you know what? The first two companies that I invested in are not based in Mumbai. In fact, if I told you I have invested in 8 companies in the last 8 months, of those, if I'm not mistaken, only one of them out of 8 satisfies the rule that it is based out of the city that I am based in. So, am I just so much of a hypocrite that I have a rule and then I don't follow my own rule? No. Well, let me not say, let me have you the judge of deciding whether I'm a hypocrite or not. But the important thing is that we do have all these rules, but we are very, very quick to relax them. For instance, I've told you about one of my rules, that I prefer to deal with local companies. I have another rule. I would only invest in companies which are in sectors or product areas which I have some level of depth in. I need to be an expert, frankly. I don't see myself as so much of an expert in anything that then I would not be able to invest anywhere. But I think I would not want to invest in something where I have very, very little knowledge or zero knowledge. Having said that, out of the 8 companies that I have invested in the recent past, one of them is in the area of clinical research. Note, my background has prevented me from knowing anything about clinical research. My interest has also prevented me from knowing anything about clinical research. So I would say that clinical research definitely falls into the category of a segment where I know nothing. And if I know nothing, why did I make the investment? Well, note, out of my 8 companies, only one of them broke this rule, that I actually invested in a sector that I don't know much about. The reason I invested was because I had tremendous faith in the entrepreneur. In addition, I was very encouraged by the kind of development and growth that the entrepreneur had demonstrated. As a result, I participated in the second round of fundraising by the entrepreneur, not the first, because in the first I felt, hey, listen, I really don't understand this sector. But by the second round, when I saw so much of growth and growth potential, in fact, I regard that as, at this point, the only company which shows a real high visibility of ending up as an IPO candidate, an initial public offering, public issue candidate. So, well, hey, I bent that rule. What are the other rules? Fine. So, having talked about local, having talked about the fact that it needs to be the sector that I understand, I always will go for an entrepreneur who is fully invested in this company and does not have a part-time business or an occupation somewhere else or a hobby that is so dear to them that it takes them away from the business. In addition, I do have a rule which is my overriding rule. As in, this rule I have never violated and I will never violate. The only problem is it is a little subjective, and trying to assess this becomes a little tough. I only deal with entrepreneurs who seem extremely honest. What does honesty mean? Honesty probably means slightly varying things to different people, but to me it means two very simple things. One is honesty in that which is tangible. So for instance, being clear about reporting, being transparent, having very high degree of governance, not being a hypocrite, not being a liar, not being somebody who would do and say anything just to get away with the situation. But this is the easier part of honesty, because everybody would regard honesty as this, but I regard honesty as having another dimension. The other dimension of honesty is, what I once heard Kamal Rekhi, a very famous angel investor, mention. Another aspect of honesty is intellectual honesty. Now, that term may be a little misleading or at least not a little unclear, but what I'm talking about here is that, as a startup, as an entrepreneur, you end up facing a lot of limitations. There are a lot of things that do not go right. In fact, sometimes it looks like there is nothing that goes right. But when these things don't go right, who is at fault? Who is to blame? I will only tolerate an entrepreneur blaming himself or herself for the things that are going wrong. Because if they're going to say, hey, employees nowadays are not sincere, hey, the government of India is not doing any work, the policies are working against us, and if they blame any and everything in their surrounding, the other people, B2B sales are good, but these stupid purchase managers don't understand anything, those kind of continue to blame the surrounding. Even if they are trying to be honest in their feedback, what I'm hearing is, you know what, I would have been successful in the ideal situation. But since neither my government is ideal, nor is my buyer, my purchaser ideal, nor is my employee ideal, obviously I'm going to fail. And I'm like, I do not want to participate in the failing entrepreneur. Only the entrepreneur who says, you know what, I had a product manager because I was busy with the business. And then this happened. I'm not able to deal with the problems that the product manager brought in. And I end up as it was causing failure or setback. Now, see, the perspective is, it's just a different fact as the same. Fact is that you hired this product-oriented manager or manager that didn't go well. But if you that, you don't have to go blame the next guy. I, on the contrary, would like to see a situation where you are honest and you say that I should have been smarter. I should have set up metrics. I should have been more perform. Now, teaching that my thoughts also. Are there different kind of investors? Yes. Now I'm using it which kind of limits in a more modern day style, the blind and the elephant. A certain number of blind men and the elephant, and at other parts of the elephant, and as a consequence, they perceive the elephant to be a different animal. This elephant is the angel investor, and there are different kinds of elephants. On the other hand, your perspective of it. You should know that an angel investor, even if the angel investor is a full-time investor, they are not as involved in the as let's say is a professional spend years over there doing investments. Angel investors sometimes they get very serious, sometimes go away from it, etc. So different kinds of angel investors are meaningless in mind. You classify them into this type and that type, but I do believe when you are seeking investment, I know you do not have the choice of 20 investors up outside your door and get pick from them. Despite the fact that we are often as entrepreneurs, kind of that, despite that, I feel no investment is definitely better than landing investment from a bad angel investor. Now one could say, how dare I use a subjective or judgmental word like bad? Well, the angel investor per se might not be bad, but that angel investor's fit and chemistry with you might be horrible, not just bad. In like or try to raise money from angel investors, try to see whether you are able to live with them, whether you could make good fellows eventually, whether you are the kind who would be able to meet occasion talk and not whether you are the kind. I've not even moved to the point where I would be able to contribute anything beyond financially, because that's going to be one of my later slides. But whether you are the kind who just have a conversation, at the very least that should be met. Other than that, hey, one is one. So we move on. Different from a group of angel investors. Well, I've been an angel investor as an individual angel investor for roughly 10 years, maybe 11. And I have been part of a group of angel investors called Book Angels. I'm a member there for a little over a year. Having said that, I must say that even I, as a specific individual, act very differently in both circumstances. When I'm part of a group, the value that the group brings in, right from due diligence to selection of deal to talking to the entrepreneur to understanding it better, is much, much deeper. In fact, it starts mimicking what a venture capitalist would do and sometimes exceeds that. Versus when I act as an individual, where I find that things like my gut feeling and my initial reaction, my love at first sight, if you will, are very important factors in making that decision. Not that I'm probably being a little exaggerated to create the right effect, But yes, I do find that individual angel investors are likely to make fast decisions. They are likely to make decisions on how they feel. While group of angel investors, the emotional aspect to an extent gets sterilized, and you may or may not be able to come across, as one person connecting with another. Having said that, this is my last slide. What can I expect from an angel investor? You can and should expect, at the very least, money if they are an angel investor. But in my experience, companies which are raising an angel round are not beyond their seed level. That means, the plant that you are seeing in this screen, you really are there. And the hand is really representative of the angel investor. To get a little out of this picture and speak more specific stuff, what I'm talking about is that you should hope to get things like mentoring, counseling, at the very least, if not mentoring and counseling, you should hope to get the angel investor invested enough in your company that tomorrow if you want to discuss ideas, they are very, very passionately, probably mimicking your own level of passion. They are very passionately involved in giving you advice. Then of course, there could be very specific values that they could bring in. They could open doors for you. They could make connections. They could help you get buyers. They could help you get customers. They could help you, negotiate prices. They could give you stuff like certain, assets that they have, relationships that they are in place, etc. Those things are ideal. They do happen sometimes, but not all the time. But if that is important for you, then it is extremely important. In fact, it is crucial that you bring this up. I think it is fair, regardless of what the power structure and proportion of power is, it is fair for any entrepreneur to find out what an angel investor will bring to the table other than the investment. In fact, I like it when my entrepreneur asks me that, because otherwise it becomes so monetary a transaction that, it does not really suit my temperament as an angel investor, because I find myself fairly emotionally involved and intellectually committed to the enterprise. And if after my investment, I find that you really wonder why I want to still talk to you and why I can't just sit tight for the next couple of weeks, months and years to generate my return, then that is not a very pleasant experience for me. So with that, thank you very much. I believe I spoke for roughly 30 minutes. I hope you learned something. If you didn't learn anything new, I hope I was able to structure some of the thoughts that you might already have had around angel investment. My email address is ajeetkhurana@gmail.com. In this highly cluttered page of text, I hope you will be able to find it from the blue mark that we have. Since we are broadcasting live, what you could do is you could just notice the text in blue. That is my email address. I'm so sorry about this mess okay, here we are. And then that is my email address. Below that is my Twitter handle. Twitter, you could follow me, but Twitter is also a very good place to get in touch with me, because I'm one of those people who's on Twitter all the time. Other than that, the National Entrepreneurship Network has certain announcements to make about the next coming webinar. For now, I open the floor to any questions that anybody might have. I'll try my best to give you valuable answers.
Thank you, Ajeet. We'll quickly move on to the Q&A session. And our first question is from Mr. Aniket. I want to know more about the investors who blindly spend over the newly formed organization.
Okay. So Aniket, you are probably asking two questions. One is, what is wrong with these investors? Here's a new company, it has no proven track record and their money is going to go down the drain quite likely. How are they going to do it? And then probably, if you are the entrepreneur who wants to come across such investors, then you're probably trying to find out, hey, where do I come across these wonderful creatures who will give me money when I just have a very premature business plan? Very short answer to both of those. On the one hand, there are those amongst us who probably because we were entrepreneurs or we are just terribly greedy or because we have aspirations which can't be met by putting money in fixed deposits or even in public markets, we seek a very great return on our investment. That coupled with the fact that we derive a lot of joy from participating in startups and interacting with the very electric entrepreneurial ecosystem causes us to become angel investors. So that is primarily the motivation. Having said that, I believe that the Indian angel investor, though it is tough to stereotype like this does tend to enter at a slightly later stage in the entire life cycle of an entrepreneur or the entrepreneurial organization than, let's say, some of the investors that I have heard of in the Silicon Valley, for instance. Where do you come across these people? If you had asked me this question 5, 10 years ago, I would have said, it's really tough and you need to be very well connected. Today, it is not that tough. On the one hand, everything is available on the internet. On the other hand, you find that, we have a situation where there are so many angels now that even angels are badly seeking good opportunities. So they want you as much as you want them. So you just could go up the internet, you could look up angel networks in India, you'll come across a dozen very quickly. Just send across an email or a business plan or whatever else that they seek on their website to them. You can contact me, you have my email address. You could also contact the email address that NEN Global has put up, and every one of us will be very happy to help you. I'll move on to the next question.
Our next question is from Mr. Atul. What about those who have an idea validated by a lot of experts but are still seeking funds before taking the leap?
Okay, now I will answer your question, but I actually have to object to the question a little bit. I have no faith in validated by experts' opinion. If you said, hey, listen, I'm going to, for instance, come up with a method where we can conduct every by 3D hologram and we don't need to have schools at all. And every expert has said that this is indeed the future of a democratized, post-internet, post-liberalization kind of education setup. And here are 20 reports and 50 people who I have talked to, and they said all of that means nothing. Okay, I do not buy this bit about validated by experts. I, as an angel investor, want validation by market. I want you to show me some traction, some amount of validation from the customer end, and then I will ask myself, can I extrapolate this validation to the point where I believe that now I can actually take a risk and make an investment. Having said that, I'll now answer your question. What do? You are at a stage where all you have is an absolutely earth-changing idea. You have decided that people are not able to find things on the internet, so you are going to give them a bar, an address bar or a search bar where they'll enter a term and press enter, and they'll be given options which will be valuable to them. You have called this Google, but you know what? You need some money. Likewise, you have come up with a way in which people can become friends of other people and network through, and someday, connect with a lot of people and thereby have what is called an entire social experience on the internet. So you are called Facebook. But you know what? You need a lot of money to actually reach a critical mass where such a thing becomes possible. So I understand that there are several ideas which at one point of time were just ideas, and had nobody supported them financially, they would not have got off the ground. I agree. What do? You have 4 choices. Choice number 1, fund it yourself using your friends, families, or some people who get so motivated by your idea that they would put money into it. These are individuals, not formal investors. So that's option number 1. Option number 2, today there are all these incubators, accelerators, mentors, there are just various names that come up in that space, who actually help you get your business off the ground by providing certain resources to you. If these resources need to be financial, some of them will also participate to a small extent. And these people, the seed level people, are used to the kind of situation that you are talking about, in that it is about dealing with an idea. In fact, there are some seed level people I know who forget an idea, they only deal with the person. They say, okay, here's a good guy, let us invest in this person, provide certain facilities to this person, and then this person will come up with an idea that will work. So there is a seed level, but the problem with the seed level is that you cannot really look at raising a lot of money. In the Indian context, raising more than 5 to 20 lakhs at the seed level, it happens, but it is extremely rare. You could be a really solid guy with an absolutely fantastic background and somebody could give you 50 crores at the seed level, but that is exceptionally rare. The third option that you have is that you need a lot of money to get off the ground. Nobody is giving you that money, not even seed capital. So you create a prototype, or you burn the midnight oil without employees and come up with something which you can demonstrate. Even though you cannot demonstrate the fact that, I took it to the market and like 25,000 customers or even 25 customers bought it, at least demonstrate something which gives me a feel of getting into a situation where I feel that there might be possibilities of great reward in this investment. I told you there were 4 things. So the first one was invest in it yourself. Second was get into a seed kind of arrangement, seed funding and incubator, accelerator, mentoring kind of opportunity. The third part is that you come up with something which actually can demonstrate to me, preferably an entire product, but if not, then at least some kind of a prototype which shows me how this entire thing is going to work so that I can have faith in it. And if all of this fails, then you can go the fourth route, which sadly enough is a route that a lot of entrepreneurs take. I do not like that. In fact, I often do not invest in companies like that. But what a lot of entrepreneurs do who basically need the money but are not getting it is they start offering services around the space that they want to be an entrepreneur in. They use that as a source of income and use this source of income to move ahead and move to their product or their exact business idea. I don't like this indirect stepping stone approach, but sometimes it might be the option. Thank you. Let me move to the next question.
Our next question is from Mr. Pramod. You said you want founders to be full-time employees in their venture. What is your say about student entrepreneurs? Do you consider them investment worth?
Interestingly, I end up dealing a lot with student entrepreneurs, probably because I stay right next to IIT Powai and then there are other academic institutes, or for some reason I am so tuned into the e-cells of various academic institutes or student bodies that I deal a lot with student entrepreneurs. Now your question is, a student entrepreneur is a student and an entrepreneur. So is the student entrepreneur in my definition not worth investing in? Should there be no student entrepreneurship, or do I not take them seriously? Here's the deal. On the one hand, I know that opinions could vary, but I regard education as exceedingly critical for successful entrepreneurship. I'm not one of those who says that our education system is so broke that it is all nonsense and see Dhirubhai Ambani did not really study and somebody else was a college dropout, so hence that proves that education is not necessary. So on the one hand, I do believe that being a student and being a good student is important. Being a good student, you are prevented from being a full-time entrepreneur in the way I defined it. You are right. So I believe that at the student stage, you should definitely set out in your entrepreneurial venture. You can definitely move to the seed, incubator, accelerator kind of stage. You can even go to the point where you start developing customers and doing business. However, the fact also is that I do not invest in student entrepreneurs. I have several mentoring arrangements where I mentor them as much as I would have mentored a company that I have angel invested in. I also have a equity position in some of these companies, but I only help them get to the point where someday when they are not students and they want to do this full time and they have given up all the other opportunities, at that point of time, if they have reached a stage which now is very exciting, I think they are far more investment worthy than somebody who starts thinking of entrepreneurship post being a student. I know this answer may not be very exciting to you and you want me to put in crores of rupees into a business which is still at the student stage, and you could talk about the fact that hey, this business was created by somebody when they were still a student, or that business, I agree, but I need full-time commitment. I would not invest without that. That is a rule that I have not made an exception in, and as a consequence I encourage student entrepreneurs to go to even market with their final product, but my association with them tends to be restricted to mentoring arrangements because I think that is what they mean the most. I'll move to the next question.
Can you specifically say why there are so less angel investors in hardware sector as compared to software and internet business?
Oh God, interesting question. When I heard the question, the first thing I thought was you were going to ask me why there are so few angel investors in India compared to America. Now, that also, by the way, is the truth, as in, though there are no exact numbers, but I wouldn't be surprised if the number of angel investors in the US was like 100 times more than it was in India. Things are changing, but that is not your question. Your question is, why do angel investors invest in software or internet or e-commerce businesses, and why do they not invest in hardware businesses? Believe me, angel investors would very happily invest in any sector. I'm not kidding you when I say, recently I came across a team which was, well, I should probably not be giving away a business plan which I have been privy to, but they were doing stuff which can't even be classified in any industry, as in it's a business plan I've never heard of. So given that we come across so many plans, we do not automatically reject something because it's in hardware. Having said that, the primary problem with hardware, real estate, or real estate based businesses such as you want to set up a movie theater or any of those is that it takes a lot of money. It's a very capital intensive business. As a result, your return on capital employed, if you're an economics or a commerce student, you understand that term. If you're not, just think of it this way. If you as an entrepreneurial venture put in 100 rupees in a couple of years, let's say 3 years, how much money will you actually generate? That would become your return. Now we find that if it is hardware or some of the other capital intensive businesses, even when you do very well, you are not able to generate the kind of multiples that we see. Now look at it this way. Somebody who invests in the public markets, so they invest in shares that are listed in the Bombay Stock Exchange or National Stock Exchange, you will notice that they don't seem to have the same problem that you are listing, that they would not invest in capital intensive businesses such as the hardware business. The reason is that the risk profile as well as the return that the public market investor is seeking is very different. For instance, if somebody who invests in the public markets puts in 100 rupees and 2 years later gets 160 rupees, there is a chance that this will be regarded as a very good 25% per annum compounded kind of return and will be seen as extremely positive. However, see, that is because of the risk that they are taking. So that kind of return seems okay. So capital intensive businesses will also work. I have, for instance, not come across an angel investor who will invest in a cement manufacturing plant. You get what I'm saying? These are very capital intensive things. At the angel investment level, you get fairly low amounts of money. That low amount could be as low as 5 lakhs or go up to 5 crores. But you understand the range is in around those kind of numbers. And if that is the case, what sort of hardware manufacturing capability are you going to set up? Are you basically just going to assemble PCs and sell them? Or you understand what I'm saying? Basically, capital intensive businesses end up not being able to generate the extremely high multiple of return that is necessary for an angel investor to make a return because they are playing in such a highly risky position. You get that? So we love all businesses, but we can only invest in those which are going to grow exponentially, and hardware usually is not one such. I'll move to the next question now.
Okay, next question is from Mr. Nishan. Should we try to raise capital from a VC or an angel? What all factors influence this choice?
I do not get the question, but I'm going to answer the question that should we try to raise capital from a VC or an angel? If that is the question, then I'll answer it. And I must also point out that after answering this question, I will move to the last question for the day. So the next question will be the last question for the day, just to tell all the people who are patiently listening and wondering where we are in the scheme of things as far as the schedule of today's event is concerned. The question is, should I raise money from an angel or from a VC? Though I would want to come up with a chart which says here are the distinguishing features of an angel as well as a VC, the differences are not so pronounced. So for instance, I will just put an entire spin to this whole thing and refer to this third creature who is an angel fund. So that means formally a venture capitalist, but doing angel investor-like investment. So there is an individual angel investor, there is an organizational or an institutional angel investor, and then there is a slightly bigger guy called VC. In reality, the fact that a VC is a full-time VC and an angel investor is not, the fact that a VC might have hopefully have significantly higher level of due diligence while an angel may not. These are differences, I agree. Likewise, the amount of money that a venture capitalist is willing to invest, it might be a few multiples. It might be significantly higher than that which an angel investor is willing to invest. Having said that, I do come across angel-like VC funds who also invest the same amounts of money that angel investors invest. Your question is, how do I decide? Actually, this is a question that I can help you with pretty easily, simply because it's not so tough. Why is it not tough? Because, I believe that VCs enter at a point in your life cycle which is after the point that an angel appears. So for instance, you're trying to raise $3 million at a valuation of $12 million. Let's say that is the kind of situation. You really appear to me like you are beyond the stage of an angel investor. You are now at a VC kind of funding requirement. Having said that, the reverse may not be as true. So for example, your requirement is 1 crore rupees at a valuation of 5 crore rupees. Now this definitely is in the ballpark where angel investors play, which is not to say that individual angel investors would bring in the 1 crore, Rather, it would probably be a collection of a couple of them who would get together and bring the 1 crore. But these sort of numbers look like the angel investment kind of level, right? Likewise, if the business is just taking off, there's some proof of concept already in place, but the traction is not very high. These are usually times that VCs don't invest. But I must tell you that I have come across fairly large size venture capital deals by these famous VC names who end up seeding the business. That means they actually enter at stages which even seem too early for an angel investor. So I think that really it is more to do with the life cycle you are at, the kind of valuation you are seeking, the kind of money you are seeking, etc., which would make the difference. Suppose you are at a stage where you could go with both. What should you do? There is no clear answer. I think that you should go with the counterparty who is going to give you the maximum valuation, not just in terms of the finances that are brought in, but also in terms of the other values that they seem to bring in. I think one more factor that you could use, and this, by the way, could be satisfied both by angel investors as well as venture capitalists, but probably more by venture capitalists, that tomorrow when you need more money, like today you're raising $500,000, something like 2.5 crore rupees, and tomorrow you want like $5 million, would the same institution or investor have the capability to give you that? Of course, they can't make a commitment to give you that, but would they have the capability to give you that money? And I think that I would be a little more tempted to go with the one who has demonstrated that they do come up with, follow-on rounds, and they like to participate in follow-on rounds of companies and entrepreneurs that seem to be successful. I hope I have answered that question well also, and with that I move to the last question of the day.
Okay, so we'll take last question of the day. It's by Mr. Matthew Jacob. How is valuation of a startup done by an angel investor? What should the percent equity which the angel wants in return of investment he will make?
Okay, see, here's the deal. I find that my colleagues, and I must embarrassingly admit, even me, spend a lot of time negotiating valuation with entrepreneurs. Your question is, how do we decide the valuation? Before I answer that exactly, and I will, let me tell you a little, about how funny the dance between an angel investor and an entrepreneur often can be, where we are dealing with a company that barely has a proof of concept and some minimal initial traction, and we are trying to come up with what is a reasonable number and what makes sense. I think that frankly it is too funny for any of us to, pretend to be able to answer that question. I feel that what we need to do is we need to focus on the fact that there is a certain amount of money that an organization needs. So for instance, you are seeking angel investment and you need to get rupees 1 crore. Now, if I as an angel investor feel that your valuation is 1 crore, and for those of you who understand the concept of pre-money, post-money, if you think that your valuation is 1 crore, now you see the problem that we are already in. The problem that we are in is that you will have to give me 50% of your company. And let us assume both parties agree to that. I as the angel investor say, okay, I'll give you 1 crore and take half your company. And you as an angel investor, as an entrepreneur say, okay, I'll take 1 crore and give you 50% of my company. Despite that, even if you were to agree to something as, I would say, rather silly as this, the problem is that how will you then give equity to subsequent rounds? So what it all boils down to is, okay, the real truth is that all of this investment really happens only based on market conditions. If I, as the entrepreneur, have multiple angel investors or multiple investors who are willing to invest in me, I can demand a higher and higher valuation. Likewise, if I really badly need the money and nobody is giving me the money, then I would really have to end up accepting a lower valuation. The nature of the economy, the level of the Sensex or the stock market index, all of these tend to have some sort of bearing on how your company is valued. Having said that, if you were to look at companies which are like, a couple of years beyond the angel funding level, something like a private equity kind of deal, in that there might be slightly more evolved, something more numerical, some method that we could use, some thumb rules, some ranges, some multiples that we could use to figure out what would be a good valuation of an enterprise. At the angel stage, really nobody wants to admit this, but it's absolutely arbitrary. What I do, I talked about rules that we have. So what I do is I like to invest in companies which have valuation of $1 million odd. In Indian rupees, that becomes roughly 5 crores. I would invest in companies that have a valuation of 6 crore and a 7 crore and a little more. I have only one exception to this rule, which was made in the case of the clinical research company that I talked about. I like to invest in companies which have valuation of under 1 crore. That is not so much of a problem. It is the much over 1 crore that there is a problem. I also like to invest in companies that do not dilute more than 15-20% of their holding right at the angel stage. I can accept on certain occasions that they would dilute 30% on a case-to-case basis, but I think that breaking the 15-20% barrier is not very healthy. What is the logic of this? So by the way, if you're looking at 15-20% and you are talking about a 5 crore kind of valuation, so the money you are raising becomes 75 lakhs to 1 crore, this could go to 1.5 crore, thereby becoming 30%. But I think that is it. I don't like somebody giving away a lot of their equity or their share of holding at the angel investing stage. The reason is that either your company will succeed or fail, just to take a simplistic black and white 0 and 1 kind of logic. If it fails, then anyway all of this entire discussion becomes moot. But if it succeeds, quite likely, since you have chosen to be an entrepreneur and an entrepreneurial business as opposed to a lifestyle business, and the people of NEN would be well served to conduct a webinar on the differences between an entrepreneurial business and a lifestyle business, because there are some very interesting lessons to be learned by entrepreneurs for that. But if you are choosing the entrepreneurial route, invariably you are going to need many more rounds of funding. And if you need many more rounds of funding, you will every time as an entrepreneur keep reducing the level of your ownership. If this level of ownership goes really low, like 15% or something along those lines, this then gets scary and becomes a significant deterrent to some subsequent investor who will then worry that, hey, you know what? How can I possibly invest in this? The entrepreneur himself or herself does not seem to be adequately invested. So I think you should be, I would be very worried about giving away anything more than 30%. I would generally not be happy giving away more than 20%. But yeah, on a case-to-case basis, it can be done. I hope that answer regarding valuation, though it does not give you the magic formula of how to value, at least admits the fact that there is no such thing as valuation, and it really gets down to whose position of negotiation is what. But I hope that the other things I told you in terms of dilution do throw some light on how you would end up valuing or giving away a portion of your stake in terms of dilution. With that, I have come to the end of today's talk. I once again will put up a slide which shows you the email address. I am at ajeetkhurana.com. My Twitter ID, which is actually a good place to listen to what I have to say, is at Ajeet K. Ajeet in both cases has a double E. It has been a delight interacting with you. It is not as much fun as it would have been had I been sitting in front of you and I could see your faces. Someday we hope that these webinars we do actually have live face-to-face conversation. I prefer those much more, but I still hope that you have enjoyed this. I strongly recommend, before I conclude, I know that NEN puts up these videos on YouTube. I strongly recommend that if you have questions which you think that others could also gain from, then please go ahead and put up your questions or your comments or your disagreements or any other sort of reaction or feedback onto the YouTube video. For the next couple of days at the very least, and probably for the rest of my life, I will continue visiting this video and responding to queries and reacting to your reactions. And I think that we could have something really good going for those of you who are interested in angel investment. With that, from my end, thank you very much. It was quite a delight interacting with you today.
Thank you very much, Mr. Ajeet, for that interesting session. Thank you to all our attendees for participating in the webinar. We are glad that the questions kept coming in, but due to the lack of time, we are unable to answer all. Please do send in your feedback and suggestions to us at eclub@indianglobal.org. Also, if you found the session interesting, feel free to blog or post about it. The recorded version of the webinar will be available on our website eclub.indianonline.org by tomorrow and also on YouTube. Do join us for our next webinar on leveraging internet for the success of a small entrepreneur. Our expert will be Mr. Vellayan Lakshman, CEO of Altius Technology. Thank you once again and have a nice day.